Do you agree with the Reserve Bank Governor that there's no recession in Australia on the horizon?
A recession is not our base case for Australia when we look over the next couple of years. So we would agree with the Governor on that statement. I think, though, what we will see is quite a material slowing in the Australian economy over the next couple of years as interest rates rise and mortgage repayments increase, cost of living remains elevated and amid multiple uncertainties. So the economy will slow, we think, quite significantly, led by weaker household consumption and dwelling. And for some, it may feel quite recessionary. We know there are a lot of challenges for some households, whether it's higher fuel prices, upcoming utility bill increases, wages that are still going backwards in real terms. So at the aggregate level, we think the economy will slow, avoid recession, but there will be pockets of greater stress. And for some Australians, it may feel much worse than just a slowdown.
Well, how do you see the global economic outlook? There's a lot of predictions now from investment houses and banks. There could be a recession in North America, a recession globally. Even the World Bank saying some countries could face a recession. We heard from the Commonwealth Bank yesterday predicting a recession in the US, UK, European Union and Japan. That would hit Australia, wouldn't it?
Yeah, absolutely. And I think that is part of our base case, this moderation in Australian activity, probably from about 3.5% this year down to something closer to 2% GDP in 2023. It's very much premised on the impact of higher rates in Australia and slowing domestic demand, but also against that backdrop, as you rightly point out, Sue, of weaker global growth. And so we know there are challenges right around the globe. Higher interest rates are a common theme everywhere. All major developed as well as developing countries are all lifting rates away from what were very easy accommodative settings from pandemic. And in some cases, the US is the key example here. The pace of rate hikes is stepping up. There is a desire to get rates higher quickly and potentially move into restrictive territory, and that's where the risks of US recession and where that part of the world probably it is the greatest threat. In the US, the key 30-year mortgage has gone from 3% at the start of the year. It's doubled very quickly to above 6%. So that transmission through to the real economy is being felt. Again, right around the globe, we see cost of living pressures from the higher energy complex, as well as food prices. And so that's squeezing household incomes. We see that probably most acutely in the UK. And while we may talk about Japan and other parts of the world, really for Australia, a big focus should be on China. So the pursuit of zero COVID, the very disruptive result that delivers when you shut down large cities or shut down pockets of the country, and the disruption to activity and labour is also slowing growth there quite materially. So their target for growth this year is 5.5%. They will come nowhere near that. So again, a slowing in Australia's largest export market. So there's a lot of risk globally. I think if the Fed does move into restrictive territory, well above 3% Fed funds, and slows that economy material, that's where your greatest risk of recession is. But there is a considerable slowdown coming up around, really right around the globe.
So where do you see interest rates going in Australia? The Reserve Bank Governor is saying telling people expect more rate rises. He has suggested to the ABC could reach as much as 2.5%. What is your analysis?
We very much concur with that. I mean, there is a reason why rates need to move higher in Australia. It's really probably threefold. The first is that global central banking backdrop. Everyone is lifting rates and they're front-loading those hikes and lifting quite aggressively. Australia is part of that global trend and the RBA needs to move. The second related to that is very much around the inflation pulse. So inflation has surprised to the upside in Australia. We expect headline inflation that's a bit above 5 now to be rising over the course of the year, testing towards 7% by late this year. And the risk is it remains elevated and quite sticky in 2023. And the third reason really, and so well above RBA target, and the third reason really is that rates at 0.85% are still very low by historic standards. So the combination of those three factors means we will see, we think, multiple rate hikes in the months ahead. We expect another 50 basis point hike in July, further hikes beyond that, and we actually think the cash rate could get up to 2.85 in Australia, maybe peak around there, but probably towards the upper end of a neutral range that the governor's talked about, this sort of 2 to 3% in terms of neutral. But these inflationary pressures in particular, I think, are the single focus for the bank now, and you need to slow the economy to try and get that inflation back into that 2 to 3% target range.